Hey everyone, good afternoon. We are going to do a watch party for the Broadcom earnings today, as well as, geez, there's like 5 or 6 other really interesting earnings that are going to be announced. We have Copart that should be announcing right after the bell, Lululemon, Samsara, Guidewire, DocuSign. In the morning, we had Sienna, Service Titan, UiPath. So we've got a lot of really interesting stocks. Most definitely a massive cap, which is a $1.4 trillion market cap company in Broadcom, but then some really interesting smaller caps that would be great to check out. How you doing today, Daryl?
Doing really good. Been a good day.
It has been. A lot of green out there, a lot of positive stocks. Broadcom has gone on a nice little rally today. It's up 1.41%. Out of the top 10, I think it's the best performing stock out of the 10 most valuable stocks on the stock market. Looks like Hot Skull is on. He's got the ticker out there, AVGO. Absolutely, buddy. That's what we're going to talk about. Amazon had a good day. Meta had a pretty good day. Arista Networks had a good day. Micron had a good day. Man, a lot of stocks had a good day. Walmart had a good day. A little bit of red here or there, just a little bit of red, just to kind of make things interesting. CRM Salesforce had a bad day. The company announced earnings last night, and I thought the earnings were good, but their guidance just lacked that enthusiasm, that confidence, and investors did not like that, and they sold off Salesforce. They sold off another software company, GitHub, or is it GitHub? GitLab, excuse me. Get my Gits confused. GitLab sold off harshly, man. And again, good earnings, but I think investors are worried that, or the story they're buying into is that AI is going to really disrupt software companies. And we'll see what happens there. So in this channel, we're going to look at stocks from 2 different perspectives. I go fundamental analysis, look at free cash flows, value, the present value of future free cash flows. I look at profits, value the future forecast of profits. And then my colleague Daryl looks at the charts. He looks at what's been going on with these stocks. He looks at all this really interesting data. That's his strong suit. I love seeing his analysis. So you get those 2 flavors as we look at these companies. It is 4 p.m. Eastern. Stock market has closed. And Copart is the first stock that's supposed to announce their earnings. They were up nicely today, 3.89. And Copart is an online auction for vehicle remarketing services in the United States, Canada, United Kingdom, Brazil, Republic of Ireland, Germany, Finland, United Arab Emirates, and just a variety. Now, do these guys provide this service just to dealers and, kind of, or do they provide it to consumers? It looks like consumers. I guess you would register and become a registered user, and then you can bid on these cars. Okay. So that's what their business is all about. Now, let's see how quickly they announce. If you see it announced, Daryl, let me know.
Yeah, I'm not seeing it yet.
All right. I'll try to find where they're, you know what I'm going to do? Quick little shortcut is.
Some of these smaller companies, news services don't pick up on them quite as fast as some of the larger caps.
Yeah, it's true. So I'm going to go to Copart's investor page, and I'll see if they're going to announce it there quickly. So we are at September 4th. Most definitely they're going to be announcing press releases. Nothing yet. So it looks like they haven't announced just yet. So back to Copart, the stock for the year to date's down 12.89, and 1 year 6.6% to the downside. 5 year looks pretty decent. Now the used car market has been up and down, right? Coming out of COVID, there was a scarcity of parts, so the used car market got really, really expensive, and then it kind of gave up that windfall, and it really went into a bad zone. I know that companies like some used car companies really struggled a couple years ago because they were caught with inventory that wasn't worth much. And these guys here, they're just doing the auction, so they're not getting stuck with inventory. I think they just auction off somebody else's inventory, so that there's not a lot of exposure there. So let's see if they've announced their earnings. That way we can get something started here and then look for the earnings of Broadcom. So nothing yet. Are you familiar with Copart? Have you ever looked at this stock?
We looked at it a week or so ago at someone's request. It's
Yeah, I
not
remember
any,
that.
yeah, it's not anything that really interested me, but I could see why people might be interested in it.
Yeah, I mean, for all, I think car prices are going up in cost. The typical new car is pretty expensive these days, and maybe that's the reason why these used car names are going to do well. I'll get my Broadcom information ready to go here. Here's Broadcom's investor page. They're going to announce their earnings today, somewhere on this page. And then we'll take a look at their revenue growth. I'm expecting they're going to have good revenue growth. And we'll look at their guidance, how they're guiding forward. And we'll also look at their profitability, cash flows. I'll update a valuation on Broadcom. I have a valuation already, but as I get more information from this quarter's earnings, I can update that valuation. Then we'll turn over the charts, see what's going on. Maybe, do you have Broadcom ready? Maybe we can look at the charts on Broadcom, kind of get our minds around that stock.
Okay.
It's good to see a lot of people are on. 270 people are viewing the stream. John Hot Skull, Shadow Guy, good to see you. Darth Buddha, and we will look at Path later. Carlos, great to see you. Thanks for joining.
Okay, so the Broadcom chart, back in December and again in January is where they hit their previous highs. Looks to be around 248 to 249. And then they had the sell-off in April, like every other stock I've looked at. Looks like that on around April the 7th, following the tariff announcements. And where I have that horizontal line on the cursor, you can see that they broke out above that December and then again January high at the beginning of June. So they had a run from there to about there of 61%. And then if I go from there to where they are today, they had another 30% after that breakout. So they are trading above their 20-day, their 50-day, and their 200-day, which all look to be upward sloping. The RSI is barely above the midpoint, so it is in bullish territory. One of the things I noticed right off the top is this negative divergence. So what that means is we have price going up, but we have relative strength going down. We also have PPO that is trailing down. Doesn't mean that the stock price is going to go down, but it does have a propensity to go down when you start seeing these negative convergence or divergences. So the PPO is in positive territory. It had a bearish crossover in bullish territory on August the 19th. They flattened out a little bit on the 12-day moving average of the PPO and looks like it crossed back above the longer average here in the next couple days, depending on where the price goes. They are up today. If we look at the candlesticks for today, we can see that they were up. There's a little bit of indecision. So we had buyers taking the price up to about 308 today, sellers driving it down to 302 or so, and we ended up right at 306.
Yeah, and looking at year to date, Broadcom's up more than 32%, and that's number one. If you look at the top 10 most valuable companies, they are the best out of that category, out of that group.
Yep. Their accumulation is at a 52-week high. They've been in positive money flow pretty much ever since the tariff lows. I see 1 week here where they went negative, but it doesn't look like it really crossed into what I would call bearish territory, even though it was negative. It has to be below minus 0.05 to start being called bearish. Yeah, and they've outperformed the S&P 500 by 70%, the technology group by 60%, the semiconductor group by 35%, and the semiconductor group is outperforming the S&P 500 by 25%. So they're looking really strong going into earnings. It'll be very interesting to see the market reaction when they release.
It's should be releasing, I think, in 5 minutes or so. They're having a terrific time with their business. Their revenues are growing, looks really good. I'm going to jump into their financials and look at historical information. Before I do that, let me say hello to Blocks for Fun. Good to see you. Thanks a lot for being a member. And Saeed, great to see you. Great to see you. Mike, you want to look at Lulu? We are going to look at Lulu.
They did report.
Yeah. And we're going to look at Lulu and look at it closely. And we're going to do that after we get done with Broadcom. Thanks for joining, Mike. Great to see you. And Hot Skull needs a major pullback on Broadcom. I'll let you work on that, Daryl, while I look at these financials here. All right. So we've got this company has been really benefiting from the data center build out. And they did acquire VMware a couple years back. And their growth was really, really good. In the fourth quarter of 2024, 51%. If you compare that quarter to the year prior, growth is slowing down a little bit. That's a combination of, hey, we're getting pretty big, so growing by the same percentage is going to be tough. Now, if they come in this quarter and they grow at like 25%, if you look at the quarter, I guess it'll be Q3 compared to the Q3 of 2024. I think this thing's going to keep working because it's just benefiting, and it does create a lot of profit. This company has very good margins. It has gross margins, 77% gross margins, operating margins, 38%, profit margins, 22.6. That's very good. That's very, very good. Free cash flow margin, 39.379, and free cash flow, $22.6 billion. Look at that cash flow growth. Beautiful. Something interesting about Broadcom is they did load up on some debt to acquire VMware, but if you can grow and expand that market cap, it doesn't develop into a big giant problem. $67 billion of debt, $9.4 billion of cash. So you have about 57.8. They've gotten so big that that's below 3 if you compare debt to EBITDA. So they've gotten really big, and they were able to grow to a size where that increase in debt didn't become toxic, which is impressive. If you remember the 80s and 90s, I'm going back a ways, this was the way companies were growing back then. They would load up on debt, go acquire some businesses, and kind of grow into their new capital structure. This has become risky. You've seen some businesses that load up on debt have a hard time. Some of them go bankrupt. So this one here, they pulled it off. They financed an acquisition, and it worked out really, really well. I tip my hat to their management team for doing that. Over the 1 year, this thing has just been a rocket ship, up 100%. Year to date, it's up 32%. Wow. 5 year, up 769%. Very, very good. All right. I don't see any news on their earnings just yet. It should be announcing soon. Stock is moving into positive territory in after hours. Let me take a look at their website, see if by any chance they've released, because they should be releasing in the next minute. See how quickly we can see the financial results. Well, we've got close to 500 people on the stream. Thanks, everybody, for joining. We are waiting for Broadcom to release their earnings, and we're going to jump into them, analyze them, take a look, see what's going on. And then we're going to look at some other stocks that are out there that announced today. It's a good list of interesting smaller caps. But the main focus is the Broadcom earnings because it's such a big company. It's showing a little bit of red. Maybe they announced something. Let's see here. What's going on? Minus 2%. Well, something's happening. What's going on? Are you seeing anything out there, Daryl? Have you seen their earnings?
I am not seeing it yet.
Now it's positive. So maybe that was just somebody sneezed. Somebody sneezed and hit the sell button accidentally.
Yeah, it's up to 312.5 now. Yeah, and there was a big spike downwards to 298.
So okay, so there it is. All right. So Broadcom announces third quarter fiscal year 2025 fiscal results and quarterly dividend. The revenue was up 22%. That's in line with what we saw in Q2. So it's right there at that run rate. Their net income came in 8.4 billion. Earnings per share 85 cents per share in the quarter. Cash from operations, all right, looks good. Really nice free cash flow of $7 billion. Wow. That's pretty impressive. At that clip, there'll be a $28 billion free cash flow company per year. That's pretty darn strong. They're guiding that they're going to grow for the fiscal year, for the full year at 24% top line revenue. That's pretty strong, but that was expected. It's not like, I'm not seeing that they're exceeding what was expected by a margin. They're meeting what was expected in my mind. What do you think based on these growth rates? So they achieved record third quarter, but they're exceeding their revenue every quarter. All right. Okay, so 22% growth. That looks good. Cash flow looks great. Semiconductor solutions grew 26%. Infrastructure software, this is probably the VM part of the business now. That grew at 17%. So the semiconductor business is leading the company. No big surprise. That's where these companies are thriving. And overall, I mean, it looks good. My sense is they're coming in as expected, and the stock is not moving higher. Well, depending on what, this thing's like popping up and down.
There is
But
some wild swings. It's going from 298 to 314.
why don't I let you take over the screen, show us the graphs, and then I'm going to start working on my valuation.
Okay, so yeah, this is the intraday showing the after market, and I can see spikes up to 314 all the way down to 298, and it seems to be hovering right around where it closed. So that's
What do those spikes tell you? Does that mean like nervousness or indecision? What does it mean to you?
there's computerized trading that goes on. They scan through these results using computer software,
Mm-hmm.
and then they're making quick decisions one way or the other. Plus, the volume is probably not what you have during the day, although I do see it trading 500,000 shares. That's quite a few in a 5-minute period. So they do seem to have some liquidity. After, let me look and see what they normally trade during the day. Yeah, so they're only at 18 million for a full day. So that's pretty interesting that they have that much trading in the aftermarket. It'll start settling down though after a few minutes. Those computerized algorithms, they make decisions faster than we can even open up the document and look at it.
So they're trying to get in or get out quickly ahead of everybody else.
Yep.
Okay. All right.
So I heard one person ask and needs a pullback. I'm looking at the 1-year chart. I haven't seen it touch the 50-day since April. It looks like 2 or 3 days ago it may have come down and touched it, but staying down only 1 day for part of a day is not any confirmation that it's going to come back and test that. So you could be looking for a while. The one thing that I can pull up here is the volume by price bars, and I'm going to tone them down just a little bit. I do see a lot of support in between those two lines, with the volume bars on the left. The gray are buys, price by volume, and the red are distributions by volume. So if it did break the 50-day and confirmed for probably 2 or 3 days in a row, or at least a week, then that would be the range that I would look at to start picking up some shares. But given the fact that it hasn't even broken the 50-day and held that for any length of time, saying you're probably going to be waiting for a while would be my guess.
Yeah, the stock's trading down about 1% as we speak. Could I show the valuation I just finished?
Sure, you bet.
All right. So the stock's trading down just a tiny bit. Again, my observation is that they came in. They came in as expected. Their guidance is also kind of as expected, but there's no fireworks like, whoa, man, they really outperformed. And when I look at the valuation of Broadcom, it's most definitely grown really nicely. I give them a really ambitious forecast. And I don't know if they're going to be able to hit this forecast. I'm going to just trim it back a tiny bit because growing their cash flow is massive. And is the data center going to keep building out the way it's being built out? Well, if it does for the next 4 years, yeah, this forecast most definitely is going to be achieved, or it could be achieved. But what if companies are like, hey, let's pause a little bit, let's slow things down? Then this forecast isn't going to be achieved, but we'll just go with it for now. This forecast is massive for cash flows, and the present value of those cash flows is over $1 trillion. It's $1.044 trillion. I add cash and take away debt, and I get to a value of all those cash flows plus cash minus debt of $986 billion. The company is well above that, and the cash flows, the value of those cash flows is 31% less than the cash the stock price is trading at today. I updated shares outstanding and so forth. So that is a premium on Broadcom. Now they've just been a high flying stock, which, you know, has had a lot of upward energy. The earnings per share is solid and growing. I gave them a PE of 36, growth rate of 15. And it gives you an actual discount of 11% if you just use your earnings per share method of valuing the stock. The stock is priced 11% below its intrinsic value based on profits. Now, I take this number and use a higher weight of it, 2/3 weight, when I combine the two and I blend the two. So a 17% premium on the stock. Another thing I'll point out, I know Broadcom well. I've been an investor in Broadcom, and the business that I'm familiar with, I like showing this desirability kind of quadrant. And if you're way up here, NVIDIA is way up here. You know, NVIDIA is just fantastic in every way. But Broadcom, in my mind, some of their semiconductors are not, they don't quite have the competitive advantage that you could say NVIDIA GPUs for sure. There's nothing like it. But in the data center, I think Broadcom is going to compete more with some of the other semiconductor companies that want to take on those workloads. So they don't have a massive moat in my mind. They are a very desirable business, but not quite as good as NVIDIA, which would be up here. So that's one of the realities in my mind of Broadcom. I've invested successfully in Broadcom, but I've always kind of maintained a caution about like, hey, their semiconductors are good, but they're not great. They're not NVIDIA. And that was in my mind. Maybe it's wrong, but that's what I was thinking. All right. So that is Broadcom. Let me pause there. Anything else you want to show, or you want to go to the comments and see what people are saying about Broadcom? Please put your comments on Broadcom. What you think of the earnings? Are you happy, sad? You think they're great, or they're on their way down? Let me see if I can go through here. Seen a lot of stuff on DocuSign, but we're not there yet. Man, a lot of earnings dropped. Sometimes on these big earnings days, I feel like a short order cook, and our restaurants outside of a baseball stadium. The game just ended, and 1 million people walked into our restaurant.
Yep.
So, but it's great to have 567 people on our stream. Thank you, everybody, for joining. Well, no comments yet on AVGO. It looks like the market doesn't know quite what to think of it, because it's pretty much even Steven here. That's
probably pretty good news.
Yeah. And they'll go through their earnings call, the actual call with the CEO talks, and 32% rate of return. Nicely done. 1 year, double your money. Who wouldn't want that? Nicely done. So if you're a Broadcom stockholder, congratulations. Nicely done. All right. So we'll have the Broadcom analysis kind of ready to go. If we get enough comments where people want to return to it, we can definitely do that. Let's take a look at, where do you want to go to next? Let me show the earnings. We've had Copart was supposed to announce, LULU, Samsara, Guidewire, DocuSign. I'll let you pick.
Copart did finally announce.
You want to go there? All right, Copart is up 1%. They're a $48 billion market cap company. And see if there's any headlines. Not yet. So maybe if I go here, we can see what they announced. Here we go. All right. So these guys are headquartered in Dallas, Texas. Copart for 3 months ended July 31st. Revenue, gross profit, net income attributed to Copart were $11 billion in revenue. Okay. So they increased revenue by 5%. And gross profit increased by 12%. And net income increased by close to 23%. Okay. Top line revenue isn't overly exciting. It's like, okay, that's good. Looks like their year ends July 31st, so they just closed their fiscal year. So for the year, revenue did increase 9.7. So their run rate on the quarter that just ended is below the annual run rate. Okay. All right. So looking at their financials, and this has got the quarter prior. The quarters, they were growing quite well for a couple of quarters. And here's where you're seeing that those quarters that are making the annual rate almost 10%. But the business is slowing down because it came down to 7.5 and that's down to 5% top line revenue. Top line revenue tells us do they have momentum in the business? More customers are buying cars, more partners are bringing their used inventory to have them auction off that inventory. So I'm seeing kind of a slowing business. The stock is 1.54 over the year to date. This was sold off. So maybe investors were thinking, man, this thing's going to get run over by a truck. Sell it. It was trading at 64. It got down to as low as 45 and investors sold out, but maybe they sold a little too much. And now the stock is rebounding. Nonetheless, I'm not overly excited with the 5% growth. That is not something that I'm like ecstatic about. I'm not an investor in Copart, not excited about the car business, haven't been excited about the car business in a long time. And that's what we're dealing with over with Copart. What are you seeing in the charts?
They were down initially, but they are up at the moment. So a little bit more indecision there. Get my chart set up right here. Okay, we can take a look at the 1 year. I think most people are interested in some other companies, but this one hasn't been performing very well. I mean, it reached a peak in May of 63.92, and now we're trading at 50, and we did trade as low as 45. We're forming a pretty long base here. That could be positive if they can break out of this downtrend. Could be some positive news. It's interesting that the candle today was pretty positive, and then the results showed a little sell-off, but it looked like people, maybe with some whisper numbers, were thinking that they'd be a pretty good report. The RSI is sitting around 65, so it's in bullish territory and not overbought. It spent most of its time in negative territory as far as the PPO. It did just go positive, looks like about a week and a couple of days ago, but we're still not anywhere where we were back in April and May as far as PPO.
Interesting.
So
Well, whenever you're ready, I've got some drama for you.
okay, go ahead.
All right. You ready for some drama?
Sure.
All right. Lululemon. Looks like ladies and maybe some guys are not buying as many stretchy pants as you would like, those yoga pants. Stock's down 13% in after hours. The market the company announced their earnings and it didn't impress investors. They grew revenue by 7%, 6% constant dollar basis compare, but they are somewhat of a retailer. They started opening their retail, stores where they sell their Lululemon apparel. And if you take that as a, same store sales, comparable sales has only increased by 1%. So I think that is like, we're hitting a wall on growth. So Lululemon stock, I think the brand's really strong. I mean, I think a lot of people like the brand. I don't personally. My wife owns Lululemon stuff. She loves it. She's happy with it. But I guess that has the addressable market has its limits. And those, yoga pants, I think they're made to last. It's not like, they're going to wear out every year. I think you can probably have the same pair of Lululemons for 10 years. So my wife was telling me as well that they are they're setting up this new business where they're buying back apparel and then they're selling it. They're selling used Lululemon apparel. I thought, that's unique. Never seen that. So this stock is down quite a bit. You want to show the charts. And while you do that, I'll update my valuation on Lululemon.
Yeah, so looks like they've been in trouble for quite a while here. So the end of January, they were at 423. There was a sell-off with the tariff announcements. They made a recovery back to about 340 and have been on a decline since that point. They're trading way below a declining 200-day moving average, which is sitting at around 301. A declining 50-day, which is sitting at 214. And if they're trading $23 less than where they closed today, then they're going to be trading way below the 20-day, which is improving at the close today. So they've been in negative RSI since the beginning of June. They have never moved back into bullish territory. Their PPO, they had a negative crossover back in June 5th. They have not recovered back into bullish territory. They have had some bullish crossovers, but those occurred in bearish territory. So that is not showing any strength. And look at this accumulation line. It's at almost a 52-week low. So they were lower at the beginning. The middle part of August was improving, but not anywhere close to where it was. And they spent basically 2 or 3 months here with negative money flow, people leaving the stock. So it hasn't looked good for a while, I would say, since the end of last year.
Interesting. And the thing about Lululemon is just the numbers are not exciting. It's just now beginning to be a slow grower. And it's one thing when these apparel companies are really growing, they get exciting, but this one, not so much. When I do a valuation on Lululemon, I do show that it's discounted by 30%, but I don't know how this company is going to convince stockholders to be excited about the stock again. It's really sold off. I mean, 46% over the 1 year, 20%. But I mean, this thing's kind of been left for dead. And you're not going to turn things around if you're growing comparatively same store sales by 1%. they need a different catalyst. If they can grow at 15-20%, we got it. But for now, the stock's really, really discounted. But I don't know when it's going to rally again. They do have good profitability. They have good PE ratios, 13.4. Analysts agree that it's discounted. It's just a hard one. Looking at the charts, are you seeing anything that's going to kind of work towards a rally or a stock appreciation period?
No, let me step back a couple more. No, I don't see any support whatsoever down here. They're at nearly a 5-year low.
And the slowing down of their fundamentals, it's almost like the market really did get this one right. Their fundamentals are slowing down. Sales are slowing down. It's kind of like, the market got this one right. Maybe it overdid it and oversold it, but in general, that's the direction it should be going. All right, let's take a peek at some of these others that announced. DocuSign. All right, this one's going up nicely. What's going on at DocuSign? Let's see. Well, they don't have. Let's see if I can see any headlines. So they announced their headline number. Let me see if I can quickly open up DocuSign. So DocuSign is the digital capture company. So here's their earnings. I'd like to look at just their earnings announcement. Where is that? Here we go. September 4th, San Francisco, DocuSign. Q2 was an outstanding quarter with AI innovation launches and recent go-to-market changes, leading to strong performance across the e-signature, CLM, I think that's contract lifecycle management, and IAM businesses. IAM, I don't know what that is. All right. Revenue grew 9%. That is good. That is good because these guys are very profitable, as you'll see in a little bit. And they were growing 8%-ish. So 9% is a better number. And okay. Billings, 13% over growth. It just means you're going to get more cash. Gross margins improved to 79.3. Very good gross margin number. Free cash flow increased. Very good. Cash increased to 1.1 billion. So this business, it's got a limited addressable market, right? It's a leader in signature capture software. It's integrated in a lot of software programs that, you want to get a contract signed, you can use DocuSign, and instead of somebody doing it the old-fashioned way, breaking out a pen and signing a contract, they could just DocuSign. It's actually become a verb. So overall, I'm seeing good numbers. I'm seeing really good numbers, and you see that their revenue keeps expanding. I continue to think like these guys are a good takeover target because they're not that big. They're very nicely run business, and another bigger software player can acquire them and then be in the business. So I think that's going to continue to be one of the things I'll look for. And I think that the current U.S. leadership in the Department of Justice is going to make it easier for bigger businesses to acquire smaller businesses. You're seeing kind of like they become a little more relaxed with Google and not forcing them to break up and so forth. So the numbers look good with DocuSign. I can understand the market liking these numbers, up almost 7%. Looks good. You want to take a look at the charts, and I can update my valuation on DocuSign.
Sure. So the chart is a bit weak. It's been on a decline since December or so. We did get a small double top here in May and June, but then it's dropped since then about 20%. It is trading below the 200-day moving average, which does look to be flat to beginning to downturn. The 50-day is still trading above that now. That's also flat. Will probably start turning upwards if they can maintain this price action. They do have a RSI that's in the mid-range, currently sitting at 55. The PPO had been negative for 3 weeks or so. Did have a bullish crossover in negative territory on the 21st of August. And the shorter term moving average of the PPO has just got into positive territory. The accumulation is down from its peak over the last year, which happened on the 4th of June, so it's slightly less than that. They did have a 6-week period here and a month-long period here where they had negative money flow, but they are in bullish territory on the money flow at the moment. So it's not necessarily one for me, but I could see where people are definitely interested in this one.
Yeah, and what's interesting, just updating their numbers and their share count. They've been buying back a lot of shares, and it's showing up. The valuation on DocuSign, this one just straight out of the oven here. It's discounted by 38%. They have very good cash flows because they have terrific margins coming out of this business, right? Almost 80% gross margins that come down to that profit line and come down to the free cash flow percentage line. And that cash flow is just growing. It's growing nicely. It's growing at 10%. I'm going to use an 8% growth rate to be a little conservative, and long-term growth at 4%. I could probably increase that, but I won't. I'll be conservative. The net present value of all that cash in the future, these guys are consistent, really consistent. $26.4 billion. They have $1.1 billion of cash on the balance sheet with no debt. So that just is a lot of value. $27.5 billion, and the market cap is 15.4. The shares went down from over 204 million down to 202 million. So that's really their share buyback program is looking like it reduced the share count by about 1%, a little less than 1%. That makes a difference. And 44% overall discount, if I look at the cash flows that this business is going to produce. The earnings per share also supports the stock price and actually shows that it's a 19% discount, and combined it's a 38% discount. This is a good looking stock, good looking company. It's has a solid business. It's the number one player in digital capture. It's just guys the limit on the addressable market. It's not like DocuSign can, expand to other categories of software. It'll be a little hard for them to do that. They could combine, merge, or get acquired with another business and kind of be a bigger player overall if they combine with another company that has maybe a different solution. Let's say, just spitballing, like if an Adobe acquired them or Microsoft acquired DocuSign, that'd make a lot of sense. I think Microsoft would probably be interested. We'll see. We'll see what happens, but this is a discounted stock, and it has been performing quite well. If you look at DocuSign's performance year to date, it's down 15%. The 1 year it's up 32%. So it's had a pullback year to date. Today is going to be a move in the right direction, up 6.6% in the after hours. But the 1 year is done well and giving investors an opportunity to buy into this. And the fundamentals look good. I agree with analysts that are around a 20% discount on earnings per share, that's roughly where I got. So I agree with that number. But I think the cash that they're producing is even better. So DocuSign's looking good. It's a good small to mid-sized valuation stock, and I'm glad I have it in my portfolio. All right, good stuff. Let me take a break here and say hello to everybody who's on. Man, we've got a lot of comments here. Little J. Yeah, CRM Salesforce was down big. It was down a lot, like 7-8%, and then it ended up toward the end of the trading day coming up a little higher. All right, so Saeed, good to see you. And these comments, I apologize that I can't keep up with the comments. When we have this many people involved, it's really hard. So Lululemon down. Yeah, there's investors don't like Lululemon. Guidance was raised for DocuSign. So that's part of why the stock's moving. Yeah, and looking at the numbers did come in better than I expected. And looks good. Looks real good. Nicely done, DocuSign. It's a good, steady stock. It's not going to be like NVIDIA that catches so much attention, but it's a good, steady stock. And it might go up, 20, 30%. If somebody acquires them, it could totally be a stock that gets paid a 40, 50, 60% premium on it. So looks good. Looks like DocuSign's getting it done. And then Lululemon, just to go over that, is down 13%. Rest in peace, Lululemon. So do I think Broadcom buying VMware was a good decision? Yes, absolutely. It was a really good decision. They got themselves deeper into that data center and kind of provide a broader portfolio of products, both semiconductors and software for data centers. So really good idea. And looks like a lot of comments on Lululemon. All right. I think I've caught most of them. I apologize if I missed yours. Let's move to the next company that we want to cover. I'm going to go back a little bit and cover Samsara. Internet of Things up 7%. And this is a small to mid cap stock, $20 billion in market cap. Year to date, this one is not doing great, but after tonight, it's going to be moving in the right direction. 1 year, not great. 5 year isn't great either. So this one hasn't had a lot of momentum. Samsara provides solutions to connect physical operations data to its connected operations platform in the United States and internationally. The company's connected operations platform includes data platform, which ingests, aggregates, and enriches data from its IoT, Internet of Things devices, and growing ecosystem and connected assets, third-party systems, which has embedded capabilities for AI workflows, analytics, alerts, API connectors, data security. So when we're talking Internet of Things is right, these machines, it could be as simple as an air conditioner. An air conditioner, when it's operating perfect, fine. But if it starts maybe to malfunction, maybe it sends an alert to a service department like, hey, I'm beginning to, and I don't know air conditioners, but I'm beginning to overheat or something. And then that service department knows, okay, the air conditioner at this office building or this commercial, maybe it's a restaurant. It's like, man, when their coolers go down, that's bad because a lot of food's going to spoil. So that's the kind of Internet of Things technology they do. And they could be on factory floors. It could be, the use cases are pretty endless. And these guys are up 7%. Their growth rate, 30%, 31%. That looks pretty darn impressive. 30% growth rate. They are small. They're not gigantic, right? $1.3 billion in revenue. But that growth rate looks pretty impressive. Gross profit looks really good. They are nice and big margin business. Their free cash flows look, I don't know if they look good yet. I'll have to do some analysis. 76% gross margins look good. They are new, so they're probably having to have more expenses until they become bigger and have scale and reduce their cost structure. But the gross margin looks good. This is a business with potential with those kinds of margins. And as we connect more machines, items, and so forth, that's just going to expand. Sensors and so forth, the use of them, much higher. So let me stop there. Do you have charts on Samsara?
I have one pulled up.
Cool.
So I drew a trend line from the peak on about February the 19th, touching this point. So we're only touching 2 points over this 6 or 7 months. But I wouldn't feel comfortable stepping into this one until it breaks above that trend line. So you're looking at about 37.5 before I would feel comfortable, because it is in a definite downcline at the moment. So if it can break through there, that's where I would consider stepping in. I don't know anything about this company, but just looking at the chart, I wouldn't even begin to think about it until we broke above here. I'm looking at the lows, and we reached the low in August. There was the April 7th low. I haven't seen many companies do that. Most of them are much higher than their tariff announcement lows, and this company managed to get back down there.
Yeah. And you know what is a surprise is the revenue is growing more than 30%. And if you think about Internet of Things, this is right in it's in the AI story, which is, well, AI is going to be able to do more physical AI, and it makes some decisions and maybe even do a lot of preventive stuff. So why is Samsara selling off when they're growing their revenues? Their story is a part of the AI use case. To me, it's a surprise that a business like this is not flourishing. They certainly have the revenue to kind of catch the market's attention that, hey, more businesses are buying Samsara technology and putting it in production. I think there's enough there for me to note this stock for myself, and I'm going to go do some homework away from this live stream and really analyze this stock, because I think there might be something there. It's up 8% as I speak, Samsara. So it looks like let's move on to some other stocks. I think somebody mentioned TTAN, Service Titan, is up 9%. That's a different software company. And these guys, Service Titan, they operate more. And let me just read their description. Service Titan provides end-to-end cloud-based software platform in the United States, Canada. Its platform connects and manages a range of business workflows such as advertising, job scheduling, management, dispatching, generating estimates, invoices, payment processing, and others. So from what I remember reading about these guys, they're really trying to service this type of service, right? Like, hey, they come out and fix something, or maybe it's you have a maintenance contract with the company and they maintain your air conditioners, or they maintain certain machinery in your factory or your commercial building, or it might be an an apartment building where these guys are doing the maintenance on it. The software is going to help these service techs get dispatched, and they know what work order they're going to work on. They work on it, finish it. Hey, I finished the job. Then the same software is going to bill the customer. So that full cycle software program is what we're dealing with here. It's a good idea. This is a part of the industry that is kind of hard to put software in the hands of field employees, because they're turning wrenches, and it's kind of, you have to have ruggedized devices, and you have to have a digital signal, but all those things are available now. Over the year to date, this stock is not performing great, 2.49, but after today, they should be in the green. And see if I'm there. We go. Whoa, how come it's going from 10 to 6.87? Interesting. Over the 1 year, this one is up 41%. This is a recent IPO. It IPO'd December 12th, 2024. So this thing's still like 8-9 months into its public journey as a company. It might be a little too close to the IPO. I'm careful with IPOs. IPOs tend to come with too many negative surprises. This one here is up for the evening, but you can see that it hasn't been an absolute winner. It's been a good stock, I guess, if you bought on day one, but there's a lot to go here. Let's see what their growth rates have been. 26% on a small number, 29% on a small number. So the growth rate on this stock in particular, this is not overly impressive, right? You have Samsara is growing at 30%, and their number was much bigger. Their number was their quarterly number 366, and they're growing at 30%. And for the annual, they're a $1.3 billion business growing at 31%. And this one here is a smaller business growing a little slower. So that's not overly impressive, right? We just showed you a different example. Gross profit looks good, but not great. I think it's about 60%. As they get bigger, they're going to get better at being profitable. So this one here needs a little more time in my book. I'm not ready to invest my hard-earned capital into a business like this. I'd like them to be successful and kind of get away from this IPO date, because many stocks kind of crash and burn. Speaking of crash and burn situations, our friends at Figma had their first earnings announcement after they IPO'd. And I think this is why I stay away from IPOs. They tend to come with surprises. It's kind of like, the cereal box where you get a prize inside. That's an IPO for you, but the prize is not always a positive thing. Sometimes, back here, some investors were feeling like, whoa, man, I caught a really nice one. But if you bought soon after that, you are not happy because you bought it $122 a share and lost more than half your investment. And this is what you get with IPOs. You got to be careful. These are small businesses that are trying to get their feet on the ground with regards to their market that they're doing business in. And this company here, knowing the software space, this is not a necessity software platform. This is a nice to have software platform. So that was one of the things that I thought was interesting about that company. So Service Titan, having a good evening. And it really needs to, I would like to see like another 2, 3, 4 earnings announcements before I get serious around that business. What do you think of Service Titan?
It's almost the same story as the last one. So if I drew a trend line across here, it's going to have to break. Well, let me just draw it. It'd be easier if I drew it. Makes it easier to see. Yeah, so it's going to have to get up to break above at least around 110 or so above this trend line before I would reconsider it. And then I'm with you. I'd like to see a few more earnings announcements, but if I were eager to get into this, I would at least wait until it broke above 110.
Hey, for a separate stream, you're being requested for a masterclass at some point to do
yeah, I
options.
responded to that one. I do trade options, but I do not consider myself very proficient with them enough to explain it. It makes sense to me in my head, but to explain it would take quite a bit of work for me to get to a point where I could teach it.
Fair enough.
I'm not opposed to doing something like that in the future. I'll keep you guys apprised if I change my mind.
All right.
But I want to make sure that you're getting good information rather than what I'm rolling around in my head all the time. So,
All right. So looks like Carlos alerted me that Enode is one of the stocks he has, and it did quite well today in intraday trading, up 12%. What do these guys do? Operates as a data engineering company in the United States, United Kingdom, Netherlands, Canada, internationally. They have three segments. Digital, data solutions, Synodex, and agility. So they do provision for AI, data preparation services. Okay, got it. And are they growing? Yeah. Yeah, they're growing nicely. Wow. Very good growth. They're small, but look at this growth. They're not going to be small for long if they keep growing like this. Man, this one here is going on my analyze later and figure out what's going on with this. So thanks, Carlos. That's a good tip. I'll come back to that in my off time. All right. So a couple more that announced today. UiPath. I've kept my eye on this because these guys are also in the AI story. UiPath is automation platform. So you can teach like it's a robotics platform. You can do repetitive tasks and teach your AI to do those tasks. Well, that's exactly like what we're talking about with AI or machine learning. And these guys, so they're right in the heart of it. Their growth hasn't been exciting in the past, right? Single digit, not exciting. If it's right in the heart of AI, shouldn't it be growing like 70% or 80% or 100%? But it hasn't. And we don't have the latest and greatest, but it looks like the market's picking the stock up a little bit. Year to date, it's down 14. And these are stocks that, I'm a little bit like trying to match things up. You have data centers flourishing because everybody's building large language models and all this build. Then you have what is supposed to deliver the value of AI, and companies like UiPath and other places like Samsara was another example, and where it's supposed to deliver actual value, business value, or efficiency, or innovative cost reductions. I'm not seeing the revenue. It's like a lot of costs going in on the build, but I'm not seeing a lot of benefit on the tail end of it, if that makes sense. And I try to kind of look at the big picture and say, well, I should begin to see some of this benefit come out of the tail end of it. The same thing with like Salesforce earlier, I guess yesterday. They're getting some AI revenues, but I guess it's not big enough. The market is not liking it. Well, at what point are we going to begin to look at the data center build and go, geez, that's a lot of money going in on the build, but there's not a lot of value coming out for businesses. Just trying to put that logic together with regards to when are we going to see the benefit from AI? These guys are not seeing it just yet. The stock is working a little bit in after hours, and these guys announced today UiPath, small cap, only $5 billion. So interesting. What do you think of UiPath?
I was answering some questions in the chat, so I'm going to have to excuse myself.
Oh, no problem. No problem. We'll just move on. So I guess Dave is getting some action, and Dave is like a new financial services type company, and they do financial products and services. And I really like what they're doing. It's like personal finance, but they do a lot of commercial financing, and they kind of get the bank out of the way from people getting credit. And they are growing really nice. 47% growth. The quarterly is even more exciting at 64. So those numbers really caught my attention, and I started a little position in them. And it's still going well. Today was a bad day, down 4.49. It's kind of it really exploded coming out of April. It really established a nice high. I'm really excited about this business. If they keep growing at these rates, I'm not worried about this stock. The market's going to really like this stock if it has high growth like that. And it is still a small cap, $2.64 billion. I have a nice discount on this stock. Next year, it's supposed to have a PE of 24, which is very, very rational. And analysts think it's still discounted. I agree with them. It's still discounted, and they do produce free cash flow. So did you have any comments on Dave?
They were asking about the volatility. If you point to the beta there, it's 3.96.
Mm-hmm.
So that's a very high beta. You take some other growth stocks. I don't know what Meta is, but it's nowhere close to 3.96.
That's a totally different animal, because Meta's like 100 billion in revenues. These guys are tiny. I think if we looked at it compared to like Robinhood, maybe that
yeah,
might be a good
let's do that. Look it up real quick and just see. It's just a pretty high beta. So you're going to have volatility whenever you have.
See, Robinhood's at 2.36.
Yeah.
And Dave's at 4. But I rarely look at beta, because beta just means it's volatile. And beta could be, in the case of Robinhood is up 500% over the last 18 months.
Yeah.
Well, that's a high beta stock. It's outperforming the market by a big margin. Well, is that negative? No, it's great, but it has a high beta. That's fine. I don't care. I'm up 500%.
Yeah. The question was, why does it move every day 3 to 5%? Well, the answer is beta. High beta.
Yeah.
That's exactly why.
Whether you like it or okay.
Yeah, another reason is how many shares do they have outstanding? 15.5 million. 13.5. I can't read your screen. It's a little small. But anyway, they're only trading 500,000, less than 600,000 shares per day on average. So there's not very many shares. So the bid-ask price for the market makers is going to be wide. That also increases volatility.
Yep. Yeah. So these small stocks, small cap, high beta, you got to have the stomach for them, because it's not going to be smooth. It's not going to be, Walmart stock where it moves a little bit. Not too much, just a little bit. Let's see what Walmart's doing. See if beta 0.65. So it trades with less volatility versus the market. So nice stable stock. This is not going to move tremendously higher or lower, but it's good to have some of these high growth stocks with high risk, because an investment in Dave could double in value very quickly. It could triple in value very quickly. It can go 10x, where an investment in Walmart is probably going to do okay, but it's not going to double in value very quickly. So yeah, agreed. Reddit has high beta. It's been outperforming. I think it's Coinbase there. Same thing. So, all right, cool. All right, we're caught up there. So Guidewire, wow, up 13.37%. Guidewire provides a platform for property and casualty insurers worldwide. The company offers Guidewire Insurance Suite Cloud. So the insurance business is doing well, judging from like Allstate's doing well, Progressive for the most part is doing well. And these guys are probably benefiting from that. So they're growing nicely. They are a software company, right? So technology, software application, yeah. Year to date, 28, 48 for the 1 year. Man, good looking stock. Market cap's 18.27 and the revenue is 1.14 billion. The PE this year is really high. Forward PE is also high. Analysts still think based on earnings per share that the stock is discounted. I do like their growth numbers. The gross profit is good. It's like 65% or so. And their free cash flow looks good, growing it nicely. It's a good looking company. And their addressable market's going to be limited to insurance. So it's never going to be a massive company. Like Microsoft is ubiquitous. Microsoft software gets used by everybody. Where these guys, they're just targeting insurance companies. But that's a pretty big market. And they are doing it well. They're growing, showing that insurance companies like this software and they're buying more of it. So that looks good. Good earnings announcement. Good looking stock. Any comments on Guidewire?
Well, they definitely needed that boost with the earnings because they had been on a downtrend since the last earnings.
Yep. Yeah, but after today, man, this thing's going to look good. I mean, the chart's going to look better because they're going to trade up at 246. So this thing is a smaller company, so the beta is a little high, not too high, 1.122. But they should look better after today for the year to. I mean, year to date 28. I don't think anybody would complain with that rate of return. And look at this chart. This looks good. This looks really good. It has an upward. If you drew a line across this, it's an upward trajectory with some volatility. And this looks really good. Last couple of years. So Guidewire, nice job. Okay, I think we covered all the bases. Let's check back on Broadcom. It is up now. It is up nicely. It's up 277. The market's good with the earnings so far and buying up the stock. There you have it. Broadcom.
Yeah, that's good news for them.
Yeah. I think we had a viewer that needed a pullback in Broadcom, and I'm sorry we couldn't deliver it. And then
you have another. Yeah, there you go. You have that question.
I don't, I get asked that a lot. Do I track politicians similar to super investors or famous investors? And the answer is no. To a large extent, I ignore it because I don't invest based on news. I invest based on fundamentals. Now, I learn a lot from looking at these famous investors, and I look at their portfolios, look at how they manage their portfolios. But politicians, they have inside information and they legally can use it. Well, if I'm trading on what, a politician's doing, the information, I'm never going to have the information ahead of the market. The market's always going to be ahead of me. And you saw how Daryl was pointing out that on Broadcom, the stock was flying up and down. You have these high frequency traders that are looking for bits and pieces of information to have an advantage. I can never compete against those guys, nor is it the type of investing I want to do. So the answer is no, I don't track politicians and I don't use that. How about you, Daryl? Do you ever use the information on politicians and what they're investing?
No, I don't trust them for anything else. I'm not going to trust them with my money.
That is such a good answer. You nailed that one. I guess I would have to agree. All right. All right. So I think we covered all the bases. Thanks so much, Daryl, for co-hosting the live stream. everybody.
Yeah,
Thanks
thank
for
you.
tuning in. Please look up Daryl's YouTube channel and lend your support to his channel. He's got a good one out there. And we're going to stream tomorrow morning at 9 a.m. Eastern. If you'd like to go over stocks tomorrow morning, that's where you can find us. We'll be doing the same format, not racing from earnings report to earnings report in the morning. I couldn't handle that in the morning. I'm barely awake and can kind of handle more methodical conversations at that point. But I look forward to seeing you tomorrow morning.
Thank you, everyone. Thank
All
you,
right.
Victor.
All right. We'll see you guys.